Today we are diving into the wild story of the $MELANIA meme coin. This is a digital currency that pretty much appeared out of nowhere, skyrocketed to a shocking value, and then, just as quickly, completely collapsed, leaving a whole lot of financial wreckage in its wake. So, let's get into how it all went down. Right, that's the big question here, isn't it? How does something like this even happen? We're not just talking about a bad day on the market. This was a financial nosedive so severe it actually sparked a major lawsuit. So what exactly went so wrong?
Okay, first things first, let's just wrap our heads around the sheer scale of this collapse. To really understand the story, you have to look at the numbers, and trust me, they are absolutely staggering. To really get what this meant for investors, you got to look at the two extremes. You had this insane peak price during that initial frenzy, and then, boom, the harsh reality of what it's worth today.
And seriously, think about how fast this all happened. On January 19th, this coin launches for just pennies, and then it just explodes. It hits a peak of $13.73. Can you imagine the hype? If you got in early, you were probably thinking you'd hit the jackpot.
And then, just as fast as it went up, it all vanished. Today, that same coin is worth about 10 cents. For anyone who bought in near that peak, yeah, it was a total and complete financial wipeout. So what we're talking about here is an asset losing more than 99% of its value. Just gone. But was this just the crypto market being the crypto market, super volatile? Or was something else at play? Well, a bunch of investors are pretty sure they know the answer.
And this is where the story takes a turn, right? It goes from a spectacular market crash to a full-blown legal battle. A group of investors got together and filed a lawsuit, basically saying this was no accident at all. They claim this was engineered from the start.
So who's who in this legal drama? Well, you've got the plaintiffs. Those are the investors who lost their shirts. Then you have the accused, executives from the crypto exchange Meteora. And here's a really key point. Melania Trump herself, she's not actually named as a defendant in this lawsuit.
Okay, this quote from the court filings really gets to the heart of their argument. The plaintiffs are saying these crypto companies used the former First Lady's name and image as a lure, what the lawsuit calls window dressing, to make a project seem legit when they allege it was a fraud from day one.
So what's the accusation exactly? What are these investors claiming the execs actually did? Well, the lawsuit centers on a classic textbook form of market manipulation known as a pump and dump scheme.
If you're not familiar with how this works, the idea is pretty simple and pretty shady. A group of insiders with a bunch of some asset, in this case a coin, artificially inflates the price. That's the pump. Then, once the price is way up and everyone else is jumping in, they sell everything they have. That's the dump. They walk away with huge profits, and the price crashes, leaving everyone else holding the bag.
So here's how the lawsuit alleges it all went down.
It started with the creation of the coin, which was released for just cents. Then came the pump. Insiders allegedly bought up huge amounts to artificially drive that price sky high. Right at the peak, they dumped their holdings, reselling for massive profits. The result? The price collapsed, leaving all other investors with a nearly worthless coin.
Right, so the MELANIA coin didn't just appear out of nowhere. To really get the full picture here, we kind of need to zoom out a bit and look at the bigger context of other crypto ventures that are connected to the Trump name.
I mean, just look at the Trump coin, which launched around the same time. You see a similar story, right? Maybe not quite as extreme, but it peaked at over 45 bucks and is now trading for under 6. It shows there's this pattern of just insane volatility surrounding these politically themed assets. And you have to understand the amount of money floating around in this ecosystem is just massive. According to a Financial Times report cited in the lawsuit, the Trump family has seen pre-tax profits of over $1 billion from crypto-related products in the last year alone. That's a billion with a B, highlighting the huge financial incentives at play here. So you might be thinking, okay, it's one meme coin, who cares? But the reason this story matters goes way beyond just the headlines. It really points to a much bigger trend and some pretty big questions about what investing even looks like now.
What we're really seeing here is this collision of celebrity culture and these super high-risk speculative assets. When you slap a famous name on a coin, sure, you can get a flood of attention and money pouring in, but it also creates this whole new landscape of risk that a lot of everyday investors might not fully understand.
And that leaves us with a pretty fundamental question to chew on. In this wild world of meme coins, where value is driven by hype and a famous name, who's the real product and who's the customer? Is the coin the thing being sold, or are the investors?